Hello everyone. Welcome today to today's session. Today we are going to discuss a very important chapter, that is chapter number 14. Now chapter number 14, unlike other chapters, is divided into two units. Okay. Unit 1 talks about special features of audit of banks. Unit 2 talks about special features of audit of non-banking financial companies. Okay. So they both are part of the same unit. Unit 1 and Unit 2. Part of the same chapter, Unit 1 and Unit 2. Okay. What we are going to do over here is we are going to revise the Unit 1 and Unit 2 together. Okay. In that, we will solve questions. We will take up some important questions on important topics. We will solve a bit of practical questions also in this chapter because they are there. There are few. Okay. And then based on that, we try to get the understanding of the chapter and the Unit 1 and Unit 2. However, one thing is these are the revision lectures. That means these are not the substitute of your full-fledged learning, full-fledged reading of the chapter and full-fledged practicing the questions of the chapter. The purpose of LVRC is to help you in quickly revising the chapter, okay, and solve your doubts. So, if you have any doubt at any point in time, please ask as much as you can. Okay, so please ask the doubts if you have any without hesitating. Okay. Before I proceed and before we start the discussion on, we will take up first Unit 2 and then we will jump to the Unit 1. Before I take up Unit 2, any doubt with respect to any of the previous discussions that we had? No? Great. Not an issue. If you have any doubts, you can still write in the chat box. Not an issue. You can ask anytime. Okay, let's start with the Unit 2. Now, let me give you an overview and then we'll move to a very good question that is there. But let me give you an overview of Unit 2. Unit 2 basically talks about special features of the audit of non-banking financial companies. Non-banking financial companies. Now, NBFCs are divided basically into some categories. Okay, these are either based on the function, basically activity, okay, and based on the scale. Okay, so there are multiple type of categorization that is done within the NBFC itself. Like one, as I said, based on the function or activity. Okay, where you have based on the function what they do. Second, there are categorization based on the kind of scale, what scale they are up to. Okay, so scale and then activity, both. These are the major two categories where we divide the NBFCs. And then the third one is also there, but now not that much relevant. Earlier it was with respect to deposit accepted. Okay, now somewhat it is part of the scale only, but still function or activity, scale, and deposit accepting. These are the three major categories where you divide the NPAs. Can quickly anyone tell me NBFCs bifurcated based on functions? Quickly, some name of the NBFCs which are bifurcated based on function.
Investment credit companies, infrastructure debt funds.
Yes.
Microfinance institutions.
Absolutely, yes.
Peer-to-peer lending accounts aggregator. Core investment companies. Housing finance institutions.
Very good. Absolutely correct. So these are certain which are the example of your based on the activity. If you can tell me also on the based on the scale, which are the ones, bifurcation based on the scale?
Base layer, middle layer, upper layer, and top layer.
Correct. Base layer, middle layer, upper layer, and the top. Very good. Now, based on that, we will take one question. Very good question. With respect to the NBFC. Okay. So let me read the question for you guys.
QX Limited is a company incorporated under the Companies Act, 2013 and is engaged in granting loans to SMEs and investing in debt securities. For the year ended 31st March 2026, the following information is extracted from its audited financial statements. Paid up equity share capital, 5 crore rupees. Net owned funds, NOF 1.50 crore rupees. Total assets, net of intangible assets 30 crore rupees. Financial assets, loans, investments, etc. 20 crore rupees. Income from financial assets, interest, etc. 3.20 crore rupees. Total gross income, including trading and other income 4 crore rupees. The company has not obtained a certificate of registration, COR, from RBI but proposes to start accepting public deposits in the next financial year as part of expanding its lending business. As the statutory auditor of X Limited for FY 2025-26, A. Whether X Limited will be regarded as an NBFC as per the principal business criteria, and whether it is required to be registered under Section 45IA of the RBI Act.
We will go one by one. Okay, so what is given in this question is, there is a company incorporated under Companies Act for the financial year ended 31st March 2026. The paid up share capital is 5 crores, net on funds 1.5 crores, total assets 30 crores, financial assets 20 crores, income from financial assets 3.2 crores. Total gross income, including trading and other income, it's 4 crores. Now, the company has not obtained certificate of registration from RBI, but proposes to start accepting public deposit in the next financial year as a part of expanding its business. As a statutory auditor for FY 25-26, you need to tell whether this particular, X Limited will be counted as an NBFC. Is this an NBFC? Yes or no? If yes, then why? If no, if why? Take a minute, read the question, then answer again. So you need to tell me whether this entity will be known as an NBFC, will be regarded as an NBFC or not. Are already there on your screen, basically. Paid up share capital, net owned funds, total assets, income, everything is there. You need to utilize that and you need to answer based on that. Yes, tell me, what do you think? Is this an NBFC? Yes or no?
Yes, sir, it is an NBFC.
And why so?
Percentage of financial assets is more than 50% of total assets, that is net of intangible assets. And moreover, income from financial assets is also more than 50% of total income. Hence, both these two conditions are satisfied. X Limited is an NBFC and registration is required.
Absolutely correct. So there is a 50-50 criteria, principal business criteria. Okay, where if the company X Limited meets the principal business criteria, it will be counted as an NBFC. Okay, so this falls under the 50-50, 50% financial asset, and the income is more than 50% of the total income from those assets. So 50-50 criteria. Okay, total asset, financial asset, and income from those financial assets. Now, that meets the 50-50 criteria. I can say that this NBFC, as per the principal business criteria, this company is an NBFC. Now, the second question, whether the present NOF satisfy the minimum NOF criteria of the NBFC as per the RBI norms. So, does they satisfy the NOF requirement? What is the NOF requirement for this kind of NBFC? Quickly. You need to
2 crores.
Yes. 2 crores. Okay. Anyone? Anyone else? Whether they satisfy or they do not satisfy? Whether they are satisfying or not? Quickly. Whether they satisfy or they do not satisfy? Anyone? No? So, if you say 2 crores, then do they satisfy the NOF requirement? Now, see, first of all, we need to understand whether it is 2 crores or whether it is some other amount. And the answer to that is in scale-based regulations. Remember, when I talk about NBFC, I talk about always scale-based regulation. Okay. Now, what scale-based regulation says for NBFC? Okay. Now, scale-based regulation basically says that based on the scale, you are required to have your net on funds. In this particular case, the NBFC, if you see, which is the NBFC, which is providing granting loans to SME. The role of NBFC is granting loan to SME. You can say as microfinance institute. Okay, NBFC MFI, microfinance institute. Okay. Now, if I call this as an NBFC microfinance institute, or let's say if I call this as an NBFC with the investment and credit company, ICC. If I call microfinance, if I call ICC, both. Okay. So what is their requirement with respect to NOF? The requirement of ICC or MFI in this particular case goes to 5 crores. Like there is a chart given in your study material. Okay, you need to refer to that chart based on the criteria. See, if I say it's an ICC, in that case, the current NOF requirement was 2 crore when it was announced in 2023. But by March 25, it was required to be upgraded to 5. And by the March 27, it was required to be upgraded by 10 crores. MFI, 5 crores. Then it was required to be upgraded to 7 and then 10. Okay, so based on the criteria, based on the categorization, I need to provide which kind of NBFC it is, and accordingly what the NOF will be applicable. If I assume this as a ICC, investment and credit company, because it is providing loans to SMEs. Okay. If I assume this as investment and credit company, ICC, in that case, I need to go for 5 to 10 crores. If I count it NBFC MFI, then I need to take it some different. Okay. But any which ways, let's say for example, if I don't even say that it is any NBFC, if I say it's a normal NBFC, not an ICC, not an MFI, then what is the requirement of the particular NOF? Then the requirement of net own funds for that particular NBFC is 2 crores. So, if it is not falling in any other category, you can say that it will have a 2 crore requirement basically for the NBFC. So, let me show you. These are the scale-based regulations that we usually discuss also. Okay. Every time. So when I talk about NBFC's base layer or middle layer or upper layer, except for the NBFCs that we have discussed now, MFI or ICC. Okay. For them, the NOF requirement is 2 crores. Okay. It is same like it was earlier. It has not changed. The net on funds is 2 crores for them. So Let me show that one. Yeah. See, the NOF shall be 2 crores. But if they are the specific category, then these will be applicable, 10 crores. So apart from that, it is 2 crores. Now, in the current given scenario that we are discussing, in that particular given scenario, the net own funds are 1.5 crores, less than 2 crores, less than equal to 2 crores. Yes or no? So as a result, they are not meeting the requirements of NOF. If they want to get registered, they need to have a net own funds of 2 crores at least. That is the minimum requirement. Okay. So that is the second part of the question. Now, third part, very important part. Briefly state your audit responsibilities in respect of registration and eligibility of X Limited as an NBFC. So, what is your responsibility with respect to registration and eligibility and audit reporting? Quickly, what do you think is your responsibility here? Anyone? Okay, let me add a particular scenario over here. Okay. Assuming Caro 2020 is applicable. I'm giving you a hint. Assuming Caro 2020 is applicable. Quickly, now tell me, what is the responsibility with respect to the reporting?
Auditor should verify whether the company has obtained registration if it is required to be registered. And in case the company has conducted any business activities without obtaining the registration is also be ensured by the auditor.
Okay. And where it is mentioned?
Caro clause 16.
Clause 16. Okay. Anyone else with any different answer? Yes, it is absolutely correct. Very good. So when I talk about Caro clause 16, okay, it is divided into 4 parts. Clause 16A talks about whether the company has registered under 45 IA. Okay, so whether the registration has been obtained if it is required to be registered. Number 2, it talks about whether the company has conducted any business of NBFC without obtaining COR, that's a certificate of registration. Third, whether the company is a CIC and whether it fulfills the criteria of the core investment company, that's a CIC. Okay, or fourth, if it is a group CIC, then whether there are more CICs which are part of that particular group. So these are the 4 points that A, B, C, D, which is required to be reported under clause 16 of Caro 2020 as an auditor. Okay. Any doubt? Any doubt with this one?
Sir, I have a doubt.
Yes.
In clause A, in this question, sir, as per question A, NBFC is required to be registered as it is satisfying 50-50 criteria. But as per B, it is not satisfying that minimum NOF criteria, no, sir, whether it is required to be registered or not.
See, if you are doing the business now, that's a very important question. Okay. That's where we come up with the 50-50 criteria. So from where the 50-50 business criteria is coming? Let me show you and let me discuss on that particular part. Very important. Okay. So when we talk about NBFC, so what is the principal business criteria? If you see the scale-based regulations also, they say that when a particular company carries the business of non-banking financial institution, so there are 2 different clauses which talks about non-banking financial institution in the RBI Act, 45 IC and IF. Now, what are IC and IVF? They are the definitions. Okay, IC, what I talk about IC basically, it talks about financial institutions. Okay, it talks about financial institution. That's what is a financial institution means. Means any non-banking institution which carries as a part of its business the following activities. These are the activities which includes one such activity of financing, whether by way of making loans or advances. Second comes the IF, non-banking financial company. That talks about a non-banking institution, which is a company which has its principal business of receiving deposits or any other scheme, arrangement, or in any manner lending or whatsoever. But the term, this one, principal business, is not defined anywhere. So for that, we use 50-50 criteria. In the Act, it is not defined, but by way of circular, it was defined. Now, if this 50-50 criteria meets, that becomes the principal business of depositing or lending, which makes that as a non-banking financial company, and in turn, which makes that financial institution, because financial institution nothing but non-banking institution, which is defined here. Non-banking financial company, a non-banking institution. So by way of F, it becomes C. By way of C, it is required to register. It is required to register because no non-banking financial company shall commence. So once I classify this is the non-banking financial company based on F and C, it is required to get registered. And then comes the requirement of the NOF. Clear?
Sir, it means if it doesn't satisfy that principal business criteria, even though if net owned funds exceeds the prescribed limit, it is not required to be registered, sir?
No,
Or is it required?
let's say for example, if it is a trading company, but it has a net owned funds of 50 crores, why it will require themselves as a registered to NBFC? Net owned funds you can calculate for any business. Now today, if a particular MNC which is listed, which is not a NBFC, may have a higher net owned funds than they have.
Okay, sir. Thank you.
Any doubt? Any other doubt?
So this is mentioned in study material also, the coverage you have been showing us. Is it part of study material or some law you have shown?
This one? This is the
Yes.
act I'm talking about. This on your screen, you have a RBI act that I'm showing you.
Okay.
Even the same thing is given in your study material also. Okay. So you if you want to refer to the entire circular and act, so you need to just scan the QR code given in the key takeaway section and you will get the links for the circulars or all the detailed references that are being used.
Okay.
Any doubts? Okay. If no doubts, can we take up one more question on a similar line? Very good question. Okay. So question is, Cora Capital, NBFC classified under the scale-based regulation frame, is required to maintain a minimum capital ratio of 15% of its aggregated risk-weighted assets and risk-adjusted of balance sheet items. The company has provided the following financial data for Tier 1, Tier 2 capital. Own funds, 1,000 crores. Investment in shares of other NBFCs and in group exceeding 10% of the own funds, 150 crores. Perpetual debt instrument by Cora, 120 crores. Preference shares, not ordinarily convertible, not compulsorily convertible, 50 crores. Revaluation reserve, 200 crores. General provision and loss reserve, 50 crores. Hybrid debt capital instrument, 90 crores. Subordinate debt, 140 crores. Risk-weighted assets, 8,000 crores. Now, what is given in the question? Considering the Cora Financial is neither a NBFC MFI nor primarily engaged in lending against the gold jewelry, compute the following: Tier 1 capital, Tier 2 capital, okay, Also determine whether the meets the minimum capital adequacy requirements of 15%. Now tell me, what is a Tier 1 capital requirement for this particular type of NBFC? Take a minute, read the question, and then tell me the answer. What is their Tier 1 capital requirement for this NBFC? Based on the given information. It is not an MFI, it's not a lending against gold jewelry. Come on, quickly. Is the
So Tier
requirement
1 capital is 970 crores.
okay? And how did you arrive at?
Tier 1 capital includes owned funds and perpetual debt instruments, excluding investment in shares exceeding 10% of owned funds.
Okay. Okay, first of all, tell me which NBFC it is. Classification of NBFC. Let's start with that. Classification.
Neither MFI nor primarily engaged in lending gold jewelry.
So which NBFC it will be? Now, in which category I will classify this NBFC? For the purpose of calculation of this own funds and net owned funds.
Middle layer.
Okay. Middle layer. Anyone else? Which classification I will give to this NBFC? Because whenever calculation question comes, always make sure you do appropriate classification. The first step is a classification. Come on, quickly. Which classification is will be applicable here? Okay, so the classification, see, understand one thing. Why the classification is important. If we go back to the scale-based regulations, okay. Now let me go to the net owned funds Tier 1, Tier 2 capital. Now this is the formula of Tier 1 capital for NBFC except BL. Why except BL? Reason because except BL, because if you see there is a requirement, this note, very important note is there, which talks about NBFC BL are not eligible to include perpetual debt instrument in the Tier 1 capital. That means if I say it is a base layer, the perpetual debt instrument will not be there. If I talk about Tier 2 capital, again, NBFC base layer are not eligible to include perpetual debt instrument in their Tier 2 capital. They are not eligible. So if I talk about this as a base layer, if I talk about this as a middle layer, it makes a huge difference. Your entire answer will change. Now tell me, which classification will you give to this particular NBFC? Base layer, middle layer.
Middle layers.
And why so?
Perpetual debt instruments are included.
But I am not required to calculate if it is a middle layer. Like perpetual debt instrument will not make this NBFC as a middle layer or a base layer. That's the main point, that perpetual issuance of perpetual debt instrument will not make a NBFC as a middle layer or base layer. There is some other requirement that will make this NBFC as a middle layer or base layer.
If there are no public deposits.
Public deposits. Okay. Anyone else?
And asset size less than 1,000 crores.
Very good. Yes, absolutely. Asset size less than 1,000 crores. Now here we don't have the asset size to determine whether it's a base layer or middle layer. Okay. But what do we have? We have the own funds. which is 1,000 crores. You can assume if the own funds are 1,000 crores, then basically based on that, the asset side will be also more than 1,000 crores. Okay. So if I talk about in this particular question, I will assume this as a middle layer. Okay. Now, coming to the particular part of the question. If nothing is given, then based on the given data, you need to assume and do the calculation. Okay. Now, in this particular scenario, if I talk about the formula for calculation of the Tier 1 capital. So, the formula for the Tier 1 capital is pretty much easy, which is own funds. Once you derive the own funds, then you need to make a bit of adjustment. That is this amount. That you need to reduce the own funds by the investment in shares of other NBFCs and in shares and debenture bonds and outstanding loans of group companies with subsidiaries and companies in the same, which is exceeding in aggregate of the 10% of the net own funds. That means whatever amount it is there, okay, whatever amount, if it exceeds whatever, in excess of the 10% of the own funds, you need to deduct that. Now let's say own funds are 100. So 10% of 100 will be 10. So whatever investment is there more than 10, that will be reduced from the own funds. That means only 10% is allowed. Only 10% is allowed. Of own funds, because the rest I am reducing. So the 90% or whatever amount it is in excess of 10%, I am reducing. So you can say that own funds and investment up to 10% of own funds is allowed. And then you need to add perpetual debt instrument. But again, it does not exceed 15% of the Tier 1 capital of previous accounting year. Now let's go back to the question. Now we understood what is Tier 1 capital. Let's understand what is given. First of all, we have own funds, fine. Investment in shares of other NBFCs and in group companies exceeding 10% of own funds. Now they have already given you exceeding 10%. So I can directly take this. I can reduce this. So what will be 1,000 minus 150? That is something. Then I need to add perpetual debt instrument. But perpetual debt instrument should be allowed up to 50%. Yes or no? But how will you calculate 15% over there? How will you calculate 15% over here? Anyone? How will you calculate? Simple.
120 into 15%, assuming it to be 100. 120 into 15%, assuming it to be 100%.
Don't do that. So what is required to be done is, if you see the FBR or the way to calculate, what we need to do is, first we need to identify what is the Tier 1 capital of the previous year. And so T1 of previous year into 15% is the max limit of perpetual debt instruments for Tier 1. This is the max limit for perpetual debt instrument for the Tier 1. Now, if this is not given, Tier 1 capital of previous year is not given in question. Assume this is within 15%. So whatever perpetual debt instrument is given to you, assume that is within the given limit. So assume this is within given limit. So let me go back to the question. Now here perpetual debt instrument is 120 crores. We don't have the T1 of previous year so that I can multiply previous year so that I can multiply 15% to calculate the max limit. But the problem is I don't have this. So simply I will assume that this is within 15%, the entire amount, and I will add 120 CR, which will give me to 1000 minus 150, 850, 970 CR is your T1. Clear? Any doubt with this? Any doubt? Yes, no? No, second question is about the tier 2 capital. What is the tier 2 capital in the given scenario? What is the tier 2 capital in the given scenario?
Preference shares not compulsorily convertible into equity, revaluation reserve discounted up to 55%, general provisions and loss reserves up to 1.25% of risk-weighted assets, and hybrid capital instruments and subordinated debt.
Very good. So, if I talk about tier 2 capital, except for BL, you have preference shares other than which are compulsory convertible. Okay. Revaluation reserve at a discounted rate of 55%. General provisions and loss reserves to the extent they are not attributable to actual diminution in the value of identifiable potential loss of specific assets. Okay. And are available to meet expected losses to the extent of 1/4 of the risk-weighted assets. Okay. Means general provisions, okay, and loss reserves to the extent they are not attributable and are available to meet expected losses, again to the extent of 1 and 1/4% of risk-weighted assets. 1 and 1/4 means 1.25% of risk-weighted assets. Then you have the hybrid debt, capital instrument, subordinate debt, perpetual debt, which was not allowed earlier. Okay, to the extent it was not qualifying earlier, you did not qualify that. So all these things now will fall part of tier. Okay, based on the given scenario and based on the question that we have, so calculate the tier 2 capital. Okay, now you calculate what is the tier 2 capital. Can anyone tell me what is the tier 2 capital now? What is the tier 2 capital in the given scenario?
540 crores.
540 crores, okay. How 540 crores?
80 crores of preference shares, revaluation reserve discounted for 55%, 200 by 1.55, and general provisions is 8,000 into 1.25%.
Okay.
And hybrid debt capital instruments 90 crores and subordinated debt 140 crores.
Okay. Will I take the revaluation?
Revaluation reserve discounted for 55%.
Okay. So let's calculate that in that way. First, preference shares, full 80. Revaluation reserve discounted at the rate 55%. That means 200 at the rate, I have to discount at 55. So remaining 45. So 200 into 45%. Okay. General provision. Now, general provision at what? How much general provision I will be taking?
Up to 1.25% of risk-weighted assets.
Up to 1.25%.
5%.
So what is the 1.25% over here? Risk-weighted assets are 8,000 into 1.25%. What we will get? So 8,000.
100 crores.
Yeah, into 1.25. So should I take 100 or should I take 50? This is 100. Should I take 100 or should I take this general provision 50?
50.
But what about this 100 then? 1.25%. What should I do with that?
It is up
Yes,
to
this
100,
is the
but we
max
are having
limit.
only 50 crores.
This is max limit. That's why I will only go with 50, not 100, because that's the max limit. Okay. Hybrid debt capital instrument. How much I will take?
90.
90. Subordinate debt.
140 crores.
Perpetual debt instrument. How much I will take?
0, because everything we took in Tier 1 capital.
So the total comes to 80. No, over here is 90.
90.
We have 50 over here. Then we have 90. We have 140 and we have 0. So in total, it will make
450. Sorry.
450.
Sir, revaluation reserve discounted for 55% means we have to
It's a
discount
discounted
200.
rate. So, okay, let me tell you what that means. It's a discounted rate. That means this is a rate at which you need to discount it. So if something is 100, I need to remove the 55%. I need to discount the 55%. Rest will be remaining 45%.
Okay, sir.
Any further doubt? Any doubt? I'll tell you a few things. On November 28, 2025, okay, if you now, a lot of students, a lot of you will try to go and search these scale-based regulations notification on the RBI website. Okay, and you might come across something called, November 28th amendment. Now, what are the November 28th amendments? I'll just provide you some background on that. Okay, so that when you go and search, you shouldn't get confused. See, what happened is on November 28th, the Reserve Bank of India, changed a lot of master directions. And one such was scale-based regulations. So November 28, 2025, scale-based regulations changed. Now, base essence and a lot of things are similar, but you will see, these are known as now, these are divided into now 3 categories. Now it is 2025 instead of 2023. So you might get confused, but don't get confused over there. Okay. Based on your exam, you have to follow your updates. Okay. And accordingly, you need to take care whether, once it will be notified, then only it will be applicable to you. So as of now, the study material which is there, you need to follow that. Don't go on the RBI website and see that, okay, it's something different over there, I need to follow that and not this one. No, it's not the case. Okay. So consider that, and accordingly, don't get confused by going on to the RBI website. Yes, you can go to the old circular, which is scale-based regulation, which will be still there, but do not go to the new circular, which is still might not be applicable to you based on your exam. Clear? Any doubt? Okay. If no doubt, okay, then this was the tier 1 and tier 2 capital that we calculated. Now coming to the last part of this question is minimum capital adequacy requirement. CARR, like we call it minimum capital adequacy ratio, requirement ratio. So of 15%. Now whether this company is meeting that 15%, yes or no? Whether this company is meeting that 15%. How do you calculate that particular 15%? That the capital adequacy requirement.
8,000 crores into 15%.
8,000 crores into 15%. Okay. So if I talk about over here, if I talk about 8,000 crores into 15%.
1,200 crores.
Yeah. 1,200 crores will be the 15% over here. What is my total capital? So what is the formula of minimum adequacy capital requirement? Like, CARR. What is the formula of CARR?
Tier 1 and Tier 2 capital should be minimum 15% of risk-weighted assets of balance sheet.
It should be greater than equal to 15% of risk-weighted assets. Now, this is your 1,200. Tier 1, Tier 2 capital we have calculated 450 and 970. So, is 970 plus 450 greater than 1,200? Yes.
Yes, sir. 1420.
Yes, 1420, absolutely correct. That means it is meeting the requirement of 15%, which is 17 point something approx. So also determine whether the Quora Finance Limited meets the capital minimum capital adequacy requirement. Answer is yes, it meets.
Yes.
Clear?
Yes, sir.
Now, any doubt? Clear with the question, like how to calculate tier 1, tier 2 capital in detail?
So this is examination question.
Yeah, there are similar questions in the exam also. Yes.
Okay.
Any doubt? Very important reason, because see, these type of questions test whether you are aware about the calculation of the tier 1, tier 2 capital. Do you you are aware about the requirements of net own funds and everything? Clear? Okay. If clear, then let's take one more question on similar line. Very good question. Okay, let me come to the question. Let me share the screen. Now, this is pretty straightforward question and pretty easy. Okay. What is the question is, Messrs. Reliable FinSecure Limited was incorporated in Jan 24. Primary objective of engaging in business of loans and advances and investment in securities. The company management has prepared its first set of financial results, which revealed that its financial assets, loan and investment constitute 65% of total asset, netted off by intangible asset, and income from these financial assets, 60% of gross income. Company applied for COR from the RBI to commence the business as an NBFC. The company currently has an NOF of 5 crores. Managing director of the company is of the view that since they have already achieved the threshold of 2 crores mentioned earlier in the regulation, they are eligible for registration and can commence high value lending immediately while the application is pending with the RBI. CA Vinay, statutory auditor of the company, is evaluating the company's compliance with the RBI Act and latest regulatory regime. Discuss the principal business criteria of the company to be classified as an NBFC based on the given data. Pretty much easy. What is the principal business? 50% of our asset should be financial assets, and from that financial asset we should have a 50% or more of income, of gross income. 50% of more of income, like of gross income. So here I have a 60% of gross income from the 65% of the total assets which are financial assets. So meeting the principal business criteria. Now coming to the point. Second question, very important. Comment on the eligibility of the company regarding its net owned funds and the managing director's views on commencing the business while the application is pending with reference to the RBI. So the company meets 50-50 criteria. Company has NOF. Let's assume the NOF requirements of 2 CR. Now they are saying that so they meet both the criteria. So still, if the application is pending, they can commence the business of non-banking financial institution. Yes, no.
No, sir.
But they are meeting the 50-50 criteria and they are also meeting the NOF criteria.
So that criteria, mainly we will look for obtaining certificate of registration. Once it is mandatory to obtain certificate of registration, it has to apply and it has to commence business once the certificate is approved.
So you mean to say that only by meeting 50-50 criteria, that's a principal business criteria, and by meeting the requirements of NOF, I am not eligible to commence the business activity of NBFC. Yes? Yes or no?
Yes, sir.
We absolutely correct. Very good. So, by meeting the requirements, you are not eligible to commence the business activity. No. So, the answer to that question is in the RBI Act itself. Let me show you. The RBI Act. The Act says that no banking financial company shall commence or carry the business of a non-banking financial institution without obtaining a certificate of registration issued under this chapter and having the net owned funds. So one, you need to obtain COR. Number two, you need to have NOF. Then only, if you satisfy these two conditions, then only you can commence the business. Which business we are talking about? Business of non-banking financial institution. Now, which is this business? Non-banking financial institution. The non-banking financial institution business, if I talk about, business of non-banking financial institution. That means carrying the business of a financial institution referred in C or business of NBFC referred in F. If you are doing any activity which is either mentioned in C which was this one, like financing, loans, advances, etc., etc. Or F, that means principal business of receiving deposits, okay, or arrangements or lending in any manner. If you do C or F, that is the business of NB, non-banking financial institution. And if you want to do that business, first meet the COR and the network funds. It is not the other way around, that if I meet the NOF requirement, if I meet the principal business criteria, I'll later on take the COR. No. Clear?
Yes, sir. Sir, even in CARA report also, it is auditor's responsibility to mention if the company is carrying on business without the certificate.
Yes, absolutely correct. Very good. Yes. So, till the time your application is pending, you cannot proceed ahead. Any doubt? Any doubt? No? If no doubts, let me also take you to one more very good question. Now, this question is on a different topic than what we have discussed now, but again, a very good topic. So, the question is, Delta FinServe is a NBFC, non-deposit taking NBFC ICC, classified as a base layer. As of now, to avoid the confusion, what I'll do is, for time being, you can ignore. Is a class, like, Data FinServe Private Limited is a base layer NBFC. Simple. Is classified in the base layer, under the RBI scale-based regulation. For simplicity, as of now, I'll do that. Now, this is the loan portfolio. Term loan A secured by property outstanding 50 crores. Overdue EMI, principal and interest for 160 days. Realizable value of security as per the valuation 45 crores. Term B loan secured by machinery outstanding 30 crores. Classified NPA for the last 20 months. Realizable value of security estimated 10 crores. Term loan C secured by hypothecation of vehicles outstanding 15 crores. First time classified an NPA 6 months back. That's a remain NPA for 6 months. Realizable value of security 12 crores. Loss asset D. Unsecured personal loan outstanding 5 crores. Identified by internal auditor as recoverable, board has said yet not written off. Okay. Now standard assess various performing loans. Okay, outstanding 400 crores. Now this is the given scenario in this particular question. Okay. Now what we are required to do? Now understand, like here we are required to follow the provisioning requirement. So in this particular question, we are required to consider the provisioning part. So let's say, like, as a statutory auditor, what you are required to do. Number one, classify each loan into standard, substandard, doubtful, and loss as on 31st March 2026 as per NBFC BL. Like, classify each loan A to D. So let's go again back. Let's go to term loan A. Now, what do you think about term loan A? Which category term loan A belongs to?
Standard asset.
Standard asset. Term loan A, standard asset. Okay. Anyone else? Anyone else? Should I
Sir,
log
no,
the
sir.
standard asset, finalize the standard
No, sir.
asset?
No, sir. No, sir. It's substandard because it is overdue for more than 160 days.
Substandard, okay. Overdue for more than 160 days. Fine. Okay. Let me mark as a substandard for now. Till the time I get any other answers. Or I'll assume that everyone is agreeing with that. Okay, substandard. What else? Second, term loan B. Term loan B. Term loan B. Quickly.
So for substandard, it is for 18 months, no?
So you're
It
asking
is
or
outstanding only for 160 days.
yes. So this is for 31st March 2026. Outstanding for 160 days. What do you think? Substandard or not?
It is standard, so sir, 0.25% because it
So,
is secured by property.
so you are saying term loan A is a standard one.
Yes, sir, because not more than 18 months. It is only for 160 days outstanding.
Okay. Another answer, standard asset. Fine. Not an issue. Fine. So one for substandard, one for standard. We'll see what is the correct answer. Term loan B.
Sir, term loan is standard only, sir.
Term loan B is a standard.
No, sir. A. Standard only, sir. Not such.
Okay. So everyone is standard. Term loan A, everyone is saying standard. Fine. Let me remove substandard. Fine. Now tell me, term loan B.
It is substandard, sir, because 20 months outstanding.
Substandard. Okay.
Substandard.
So term loan B, substandard. Let me mention that for time being. And if I don't get any other answer, I'm assuming that everyone is agreeing with that. Substandard. Okay. Term loan C. Come on quickly. Term loan C.
Substandard.
Substandard. Okay. Anyone else?
Six. Classified as NP. Sir, term loan say it is standard.
Term loan C standard. Okay. I'll assume everyone is agreeing with that. Otherwise, I will have a different answer. Term loan D or loss asset D.
Loss asset.
Okay. Loss asset. Okay. Again, before I close this, any different answers to these? Any different answer? Okay. If not, let us discuss the particular criteria over. See, what is the criteria of, first of all, getting determined that it is a standard asset, substandard asset? Can anyone tell me those criteria? Let me have a table.
Sir, for base layer, for base layer, if it is NPA for more than 90 days, then it will be classified as NPA. I mean, if interest and installment is overdue for more than 90 days, then it will be classified as NPA.
Okay. So let's go about substandard first. If it is, now I'm talking about base layer as of now. Substandard, base layer. If I have to say this a particular asset as a substandard asset, it has to be NPA for
More than 18 months.
more
Less than 18 months, sir. Less than 18 months.
I mean,
than
if it is NPA up to 18 months.
up to 18 months. So you are saying up to 18 months. It will be an substandard.
As a from the day when it is classified as NPA, from that day to 18 months, it will be in substandard.
Perfectly fine. Okay. So from the day it will be classified as an NPA, from that particular date till the 18 months, it will be called in substandard. Right. Then comes to the NPA classification. As of now, tell me when a particular asset will become an NPA.
For base layer, if interest and principal is outstanding for more than 90 days as of 31st March 26.
90 days as of March 26. Okay. That means anything beyond 90 days till the period of 18 months, up to 18 months from date of NPA is my substandard. Now let's go back to the question. Overdue EMI principal for 160 days. If I remove 160, like 90, how much it will be remaining?
70 days. 70 days.
Is it less than 18 months?
Yes, sir.
Yes, this is less than 18 months. Should it be standard asset or substandard?
Standard asset, sir.
It will be substandard asset.
Yeah, yes.
Because 160 days. So 90 days is an NPA criteria. Now it is an NPA. NPA for 70 days.
Yes, sir.
Understand that. NPA for 70 days, that means it's an substandard asset because it is less than 18 months. So this is an substandard asset. Now coming to the term loan B. Term loan B, NPA for 20 months. Says an NPA for last 20 months. I'm not saying outstanding. I'm saying NPA. More than 18 months. Let's go back here. If it is doubtful, if I have to say doubtful, there are categories in doubtful, yes or no?
Yes, sir.
Yes, sir.
So what are those categories?
For base layer, if it is above 18 months, and for middle layer and above, it is about 12 months.
I mean, as of now, I'm only talking about base layer, no middle layer. I'm just talking about base layer. Doubtful assets, the criteria. Quickly.
If it is
Yes, sir.
classified as NPA and if it is NPA for more than 18 months.
NPA for more than 18 months. Yes, very good. But it has categories. Doubtful.
Yes, sir. For provision for secured up to 1 year 20%, 1 to 3 years 30%, more than 3 years 50%.
Secured up to 1 year.
20%.
Okay, yes. You say up to 1. Secure. 1 to 3 secure. And more than 3 years secure. Okay. Now, unsecured and doubtful. So, as you said,
100%.
up to like 1 to 3 years, when I talk about doubtful, okay. When I talk about doubtful, 1 to 3 years with security, there why I have done the bifurcation because of the provision. But as of now, doubtful up to 1 to 3, more than 3, secured category, unsecured. As of now, doubtful unsecured will be 100% directly provision required. Fine. Now, in this particular scenario, if I talk about in the above, it's a doubtful. Term loan B is a doubtful. That is for sure. Because it is 20 months, more than 18 months. But doubtful, which category it will be? Up to 1 year?
Up to 1 year.
Yes, up to 1 year. Because when I talk about the term doubtful up to 1 year, okay, when I talk about this term being doubtful up to 1 year, that means at that point in time, it is from the date they become doubtful. It is not the date of NPA that I'm talking about. So don't get confused that I'm talking about doubtful up to 1 year. That means from the date of NPA. No. Period for which they are considered doubtful. I'm talking about period for which they are considered doubtful over here.
Sir, means we have to consider here from 18th month, sir.
Absolutely correct. So from 18th month, whatever period it is, I have to bifurcate between this. So this is coming after 18th month of NPA. Okay. After 18th month of NPA, up to 1 year, 1 to 3 year, and more than 3 years. Fine, great. So this is doubtful up to 1 year. That will be finalized. Good. Term loan C, first time classified NPA 6 months back. You said standard. What it should be? What it should be? Term loan C, first time classified as an NPA or remained NPA for 6 months. Anyone?
Substandard.
Very good. It is substandard. It is substandard. Okay. Absolutely correct. Now, last D is a loss asset and fifth is the standard asset by default. We got the categorization done for this particular category. Now coming to the point is a provision for each loan and standard asset. Now tell me what are the provision percentages and calculate the provision. You have to calculate the provision. So for substandard asset, what is the provision requirement? Base layer.
0.25%.
Substandard.
10%. 10%.
10%. Net of security with security. Net of security with security.
Sir, it is general, means both included, secured and unsecured.
General. Yes, absolutely correct. So we are talking about, as of now, for the base layer, general provision of 10% on the outstanding in case of substandard. So if I talk about 50, it is 50% or 50 crores 50 into 10%. Now, two number, that is doubtful up to 1 year. What will be the provision requirement? What will be the provision?
For secured 20% and unsecured 100% provision.
For secured 20% and for unsecured 100%. Okay. Now, we will also write this over here, and I want you guys to have this table for you also. So, my provision over here is 10% general. My provision up to 1 month, provision. Okay. So, up to 1 year, the provision requirement for the doubtful asset is 20%. 1 to 3 years, 30%, and more than 3 years, 50%. Unsecured, directly it will go to 100%. And basically, if I talk about loss asset, it's by default 100%. Okay. So these are the provision requirements. However, there are changes based on the type of. Let's say, for example, if it is NBFC ML, there might be a change. So I'm talking about as of now for the base layer, not for the middle layer. Remember that. Okay. Even for the standard asset, what is the provision requirement? Standard asset.
0.25%, sir.
0.25%. Sure? Or 0.4%?
4% is for middle layer, sir. 0.4%
Absolutely.
middle layer.
So 4% is for middle layer. Do not confuse with the base layer. Okay. It is for the middle layer. Standard asset. Provision. 0.25%. Okay. That is the provision requirement. Now here in this particular case, I have a term loan of 15 crores. Okay, here. I have a term loan of 30 crores. Realizable value of security 10 crores. So out of 30, 10 is secured. The rest 20 is unsecured. So 20 into 100 and 10 into 20. Term loan C, that is 15 crores. So 15 into 10% as we discussed above. Loss asset 5 crores. 5 into 100. Standard asset 400 crores. 400 into 0.25. Clear?
Yes, sir.
So the total will be, your total provision in this particular scenario will be like 5 crores. This will be 20, 0.2, and total this 20, 0.2, 1.5, 5, and 400 into 1. So 50 over here.
34.5, sir.
34.5 crores is your particular, the total provision required in this scenario. Clear with this? I think I am stable also. Yeah. 50, 10%, 5 crores, 15, 10%, 1.5 that we discussed. Term loan A and C because these are substandard. Term loan B, unsecured portion 20, 100, 20 crores. Term loan B, secured portion 10, 20, 2 crores total. Loss asset 5, entire 100%. Standard asset 400 comes to 2.5 and 1. So total comes to 34.5. This is how you need to calculate the provision for each of the category and the classification for each of the category. If I assume this is a base layer, remember, very important part, base layer. If I change this to the middle layer, entire answer will be different. Clear? Any doubt? Any doubt till now? No?
No, sir, clear.
Okay, if clear, then let's take a quick 10-minute break. After the break, we'll gather back and we will take one more interesting question. Okay, let's take a quick 10-minute break. Thank you. that we have. Okay, it's a case scenario. CA Mridula, practicing chartered accountants, has been appointed as a statutory auditor of PQT Limited, a reputed listed company engaged in manufacturing electronic products as per the provisions of Companies Act. In addition to his responsibilities, he is actively involved in advising government on the proposed legislation aimed at attracting investment in advanced technology in electronic product sector. He publicly advocated the public policy in the TV debates article, and there was one part to that. Now coming to the second part of the question. Meanwhile, CA Mridula is also a statutory auditor of a FinCorp Limited, a non-banking financial company for the financial year 23-24. While reviewing the financial statement, he observed that the company has made the following provision in compliance with the RBI prudential norm for asset classifications. So standard asset 200 crores, nil. Substandard fully secured 15 crores and the provision is 1 crore. Doubtful 1 to 3 years fully secured 8 crores and the provision is 2 crores. Loss 2 crores and the provision is 2 crores. Total provision of NPA 5 crores. Okay. Now with respect to that, we have few questions. In the provision of loss asset of 2 crores, is the provision of loss asset of 2 crores correct as per the RBI norms? So this is the first question. Now the loss asset was of 2 crores and the provision is of 2 crores. So do you think is it correct?
Yes, sir.
Yes, very good. Okay. Second question. FinCorp Limited has classified 15 crores of loan as a substandard asset. As per the RBI norms, what should be the minimum provision requirement on this category? So let's go back. This is the substandard that we are talking about, fully secured. So what should be the categorization? As of this question is as of 31st March, but consider as of 31st March 26. Now, what is the provision requirement? Let's not go to the 24. Let's go to the latest one, 26. What will be the provision requirement if I say this is about 26, not 24?
It should be 10%.
Substandard fully secured.
10%.
Okay, yes. Very good. Very good. Okay, now this was substandard, which is 10% general provision. Okay, now second part, doubtful assets, 1 to 3 years, fully secured. So it was 8%. The provision is 2%. Is it correct?
No, sir. 2.4, 30%. It should be.
2.4, 30%. It is fully secured.
Yes, sir. For unsecured, it is 100%. For this secured, it is 1 year, up to 1 year, 20%, then 1 to 3 years, 30%, and above 3 years, it's
very good. Yes.
50%. Yes.
Very good. Okay. So absolutely correct. When I talk about doubtful, up to 1 year, 20%, 1 to 3 years, 30%, and more than 3 years, 50%, if it is secure portion. In this case, it's a secure portion. 1 to 3 years, 30% will be the provision portion. There, any doubt? Pretty easy, nothing difficult to it. Now that was your unit 2. Now we will proceed to the unit 1, which is audit of the banks. Okay. Now, unit 1, audit of the banks. So for that, I have a very good question again on the similar lines.
So in this question, how we will identify that this is a base layer or a middle layer?
Generally now in every question, either you will be given asset size, either you will be given the classification, or deposit taking, non-deposit taking. Some information will be given from where you have to identify whether it's a base layer or middle layer. If let's say a hypothetical example, which is very rare, let's say no information is given, nothing is provided, okay, you don't have any information, you can assume it's base layer or middle layer then.
If it is asked in this MCQs, case scenarios, then our answer will be wrong if we choose the different one.
But generally, see, in those particular scenarios, you will be provided the detail. You will be provided the relevant detail. What is the relevant detail of in that particular case? Now,
Okay,
this
thank you, sir.
this is for the 24. Okay, 23, 24. Scale-based regulations were there somewhere at, I think, October 23. After this, they were applicable, in gliding path after 24. So, for the new questions, you will be definitely having that information. But any which ways, if I talk about in this scenario, you have the information. What is the base layers requirement? Asset size. Now here the total standard asset is 200 crores. Less than 1000 crores. Yes or no?
Yes, sir.
So I can, based on that, I have to assume it's a middle base layer, not middle layer. Because my standard asset, like over there, I have to take the total assets. If you total it out, 215, 8 and 2, still it will not go beyond 1000. Clear?
Yes, sir. Thank you.
Okay. Now, another good question about Unit 1. Now we will shift to Unit 1. Unit 1 is the audit of banks. We will take some good questions on Unit 1 and we will understand how we will do the audit of banks. So, you have been appointed as a concurrent auditor of a branch of Silver Bank Limited, which primarily deals in the foreign exchange transaction. During the audit, you notice discrepancies in certain inward and outward remittances, as well as unusual fluctuation in the escrow account balances. What audit procedures would you implement to verify the accuracy and the compliance of foreign exchange transaction of this branch? So this is the question. Let's say this question is there in exam. Okay, what will be your answer? Quickly. Understand logically in this particular scenario. You will get your answer. Anyone? Concurrent auditor want to check foreign exchange transaction of a silver bank of a given branch. Foreign exchange transactions. How will you check? Unit 1. Anyone? How will you check? Quickly. Come on, pretty easy. Okay, how will you check the foreign exchange transaction? Like if you, let's say for example, if a general scenario is there, like forget about, if you are there in an audit of a company, how will you check the foreign exchange transactions? Okay, let me tell you. When you have to check about the foreign exchange transactions with respect to the banks, see, I would check whether, first of all, whether the foreign exchange bills which are there, okay, negotiated under the letter of credits are appropriate or not. I will check that. Number 2, if there is a foreign currency, non-resident account, okay, and other non-resident accounts. Now, in that case, if there are foreign currency non-resident account or other non-resident accounts, whether the debit credit are, within the given permissible rules, LRS or, whatever FEMA rules are there. So whatever debit credits are there in those accounts are within the given rules or not. Okay. if there are any inward outward remittances, whether they are properly accounted or not. Okay, so and if there are balances in nostro accounts in different foreign currencies, whether they are within prescribed limit, like there is a limit by the RBI, within that particular balance is within the limit or not. So there are few things that I will do in order to verify. I will do the reconciliations, verifications of the nostro account balances. By that way, I can check the foreign exchange transactions of Silver Bank. Yes. Again, as I say, what you need to do is you need to understand, okay, the particular type of thing that you want to audit. If I'm talking about foreign exchange transactions, okay, in that case, what actually happens in the bank, if you understand that, then only you will be able to, appropriately audit that. So first you need to understand the working of banks on that particular area. Let's say foreign exchange transaction, loans, investments, assets, SLRs, all those things. Okay. All those things are there. Over there, I will check whether, what is the working of bank, first of all. If I get the appropriate, if I understand the appropriate working of the bank, of that particular function, I can easily audit that. If you want to see the answer of this question in your study material, it is on the page number 14.51. See, deposit designated in the foreign currency. One is that. Verify FCNR accounts opened during the year on sample basis. Verify on sample basis permissible credit debits in FCNR accounts as per RBI directions. In case of FCNR accounts, verify whether these have been converted into INR at the rate notified by the head office. Whether any resultant increase or decrease has been taken to the profit and loss account. Now this is deposits. Okay, again, similarly, I'm talking about all the foreign currency transactions. So if I'm talking about all the foreign currency transactions with respect to everything, then other things I also need to take care of. Clear? Any doubt? Any doubt till now? For example, other things, if you want to see, it is on the page number 14.67. Okay. This is foreign exchange. Foreign exchange transaction testing. What you can do is foreign bills negotiated under letter of credit, FCNR non-resident accounts, whether debit credit permissible rules, as I said, LRS or other rules which are there. Inward outward remittances, extension and cancellation of forward contracts by the purchase and sale of currencies. They are duly authorized. Necessary charges have been recovered. Balances in nostro account in different foreign currencies are within prescribed limits. Overbought sold position maintained, okay, in different currencies is reasonable. Whether the adherence to the guidelines about dealing room operations and verification, reconciliation of nostro accounts, transaction balances that we perform, as we discussed. So these are few things that you can do with respect to foreign exchange transactions. Okay. Okay. If no doubts, let me proceed to the next question. KNC Bank Limited was having 20 branches all over India by the year end 31st March 2024. At the Mumbai branch of the bank, there were high value cash deposits. In one of the current accounts during June 2020. Your firm has been appointed as a concurrent auditors for the Mumbai branch for the year 23-24. The cash collected by the branch was remitted to the currency chest on the very same day. But during the concurrent audit for the month of April 2023, itself, the auditor noticed that the branch was unable to show intimations sent via email to the currency chest for the cash remittance. how the discrepancy of not preserving the intimations of the cash remittance to the currency chest by the Mumbai branch of the bank should be dealt by the concurrent auditor in his report. Select the correct option from the below. So we have an option. The auditor should report the matter as a majority irregularity in his audit report to the management. The auditor should discuss the importance of preserving the hard and soft copy email sent for the cash remittance with the branch manager and check for its compliance in the next audit period. The auditor should verify the details from email sent to currency chest and close the matter. As a minor irregularity, the auditor can ignore the same. What do you think would be the correct option in this scenario? So take a minute, read the question again, and then try to answer. Take a minute, read the question, and then try to answer. Okay, so these are the options. Now tell me which is the correct answer and why. Which is the correct answer and why? Come on quickly. Which is the correct option over here?
Sir, option B.
Option B. Why option B? Any specific reason why option B?
When compared to other options, this looks more better, more responding.
Okay. Let me
If
tell you.
actually the cash is remitted to the currency chest. If it is not remitted on a daily basis, then it will be a major irregularity. But in this case, it is remitted, but there is no email confirmation about the remittance.
Okay. Absolutely correct. See, now based on the major and minor irregularity, we need to understand the reporting system. If you can come on the page number 14.69 of your study material. Okay. Now over there, you have this reporting system, 10.7, very important. How the reporting happens. So concurrent auditors are required to report the findings, that is for sure, in a structured format. There is a format given. Okay, you already know that. Now, if there is a major deficiency, which is during the audit, notice during the audit, that should be highlighted in a special note and given immediately to the bank's branch or controlling office. A quarterly review containing the key features, okay, should be placed before the the particular branch. Okay, so that particular what you can say the special note is required to be given in this scenario. Okay. Now, if this is a minor irregularity, so minor irregularity pointed out by the concurrent auditors are to be rectified in a timely manner. Means if you are doing a quarterly one, so in the next quarter you can check if it has been rectified or not. If it is a serious irregularity, then it should be reported to the controlling office or head office for the immediate use. Okay, and follow-up action on the concurrent audit report should be given high priority. So if there is a follow-up action required, then it should be given high priority. If it is a minor irregularity, then yes, it has to be rectified in a timely manner. But serious ones are required to be reported to the head office. Now, in the given scenario, what was the scene is cash was remitted timely, there was no delay in the remittance of the cash. The only part was that the slip was not maintained, or the email was not maintained for the cash remittance. As a result, it's a minor irregularity, and auditor should discuss the importance, okay, and check for its compliance in the next audit period. But I cannot, say that this is a major irregularity. And why option D is incorrect? I say it's a minor, but I cannot ignore the same. I have to check for the next compliance period, whether it has been being, complied or not. So first I will tell the importance. I will check for the follow-up in the next compliance period. I will not report to the management as of now because it's not a major irregularity. And why option C is not there or not correct one? The reason because the mail is not there. How will you check the mail? So should verify the details from the email sent to the currency chest. There is no email. That's why everything is there. Clear? Why B is the correct option and not the D or any other option? Any doubt to this? Any doubt?
Clear, sir.
Okay. If clear, then let us take one more important question with respect to the same topic. See, sometimes I'll just tell you one thing, okay? I'll not discuss the answer. I'll just tell you the question, and then we will discuss the chapter and that's it. Because that's not pertaining to bank audit, but it may have. Now see this question. ABC Bank recently faced a cyber attack where hacker attempted to steal the customer data. This raised concern about their cyber security measures. A regulator now requires financial institutions to assess their cyber risk management and improve their defenses against such threats. To handle cyber risk effectively, it is important to understand key stages, elucidate the stages of the cyber risk that an organization should focus upon. This is not from chapter 14, but it is from which chapter? Cyber risk?
Digital audit and auditing digital.
Yes, chapter 12. So sometimes student may read ABC Bank. They may think it's bank audit related question and they may write starting answer on that particular line. No. Understand the question, read the question fully and then try to answer. Clear? So we have already, I think, covered this particular question in chapter number 12. But just for your understanding purpose, I'm telling you that if you will skim this particular part, you will come to no, this is the question from the bank audit and you will write the answer in that way. But that will be incorrect. Okay. Let me take up some more questions on the similar topic. Just a minute. Let me share my screen. Very pretty important question and small question, but pretty important one. Simple. Advances are generally constitute a major part of the asset of the bank, requiring significant attention from the auditor's primary. What are the specific areas regarding which an auditor seeks to obtain evidence while auditing advances? Furthermore, outline the suggested procedures specifically for the evaluation of internal controls over advances. What you are required to do is what are the audit procedures that you will apply over the advances that you need in case of a bank audit. Understand the area, what is there in the advances, and then try to answer.
First, we will look into the credit worthiness of the borrower before sanctioning any advance.
Absolutely correct.
All the documentation process need to be done before the sanction of the loan or advance.
Yes.
And margin should be maintained in case if there is any depreciation in the value of security.
Okay, yes.
And the security should be in custody of the responsible officer, and if it needs to be registered in the name of the bank, it should be done, or else the required documents should be maintained with the bank.
Yes. Absolutely correct. See, when you have to answer on the advances, you have correctly answered. But bifurcate between the stages of the advances. Understand the process of the advance. From advance being evaluated, okay, from starting when some customer approach the bank to get the advance, from that particular stage to the disbursement, to the periodic review, to the closure and everything. Stage by stage, go through and see what you can do follow as a part of the order. So, for example, when I talk about first giving the advance, let's say I am the auditor, I am now coming into the bank. Advances are not being given in front of me, they are already being given. But as a process cycle, I have to see from the start. Process cycle, I have to see from the start, from the date when the advances were given. So, on the date when the advances were given, what was the agreement that was signed? Installment, EMI, rates, tenure of the loan. Now, whatever it was decided at that point in time, whether the same has been entered appropriately in the system. Number two, customer. The customer to whom the advances were given, whether there is a customer ID tagged in front of that. Because the facilities and the borrowings and the classification of those facilities now is being done customer-wise rather than the facility-wise. I will take up the advances and I will examine them on the sample basis. Okay. I will see the categorization of advances into NPA. Like if they have appropriately categorized the advances or not. Okay. Then I will talk about, I will look into the interest charge on those advances, whether it is as per the given rate or not. I may perform analytical procedures. Okay. I may perform some different procedures to identify, is there any quick or early mortality accounts? That means you're through closure. So let's say through NPA. So is there any quick mortality accounts? Are there any accounts which are required to be restructured? Are there any accounts where the internal auditors, RBI inspection team has commented adversely so that I should account them as a loss account? When the accounts are closed, they are appropriately closed. The advances, when recovered fully, they are appropriately closed or not. Okay. So, in case of recoverability, when I talk about the maintenance of the advances during the periodic statement submission, latest financial statement of the borrower, inspection of the security, all those things. Like, if the credit facilities are given, what is the credit limit, cut off, everything is required to be understood. Okay. So that is one particular thing when I talk about substantive audit procedures over the advances. Can anyone tell me what are the evaluations of the internal control? Like which internal control you will look for the advances? Quickly. Internal controls over advances. Internal controls over advances. Which are those?
It is
Again,
properly sanctioned or not, sir.
Yes. You were saying something?
Yes, so it is properly sanctioned or not.
Yes, absolutely correct.
Documents are valid or not.
Yes. Correct.
If there is any overdrawings above the sanctioning limit, it should be reported to the head office.
Yes. What else?
If there is any additional limit sanction, that should be within the limits. That is, it should not exceed 20% of the existing limit, and it should not be for more than 90 days.
Yes. Very good.
Yes, sir, RBI guidelines for banks and all. Its prudential norms, etc.
So yeah, absolutely correct. So if I talk about basically advanced internal controls over advances, again, I will go with the cycle from the start. Credit appraisal, okay. Then whether the proposal at the time of preparation of the proposal, it was done appropriately as per the policies, bank policies or not. Whether the credit worthiness of the borrowers is done as per the bank policies or not. Okay. I will examine whether the advances are sanctioned as per the delegation of authority. That means it should not be the case that 1,000 crore advance has been sanctioned by a lower level officer, lower authority officer. Okay. I will examine the controls over verification of the loan documents, whether all the loan documents have been obtained. Number two, I will check whether the disbursement of the loan has happened only after the documents have been executed. So is there any control around that? So I will evaluate that control. I will evaluate a control which will, look into the sanction terms of the loan. What are the sanction terms, or whether they are as per the policy or not? Again, valuation of securities. How the valuation of securities is done by the bank? Is there any control around that? Like to verify the valuation of the securities before providing the loan, or security requiring registration under Companies Act, you need to create a charge. So whether is there a control around that? Is there a control around verifying the documents or recording the documents, validity of the documents, whether documents are valid, appropriate, complete, accurate, all those things? Whether there is a control to verify or to identify any account which has a balance beyond drawing power, over drawing power. Is there any control on the renewal of the review of the advances by the bank? I will evaluate that particular control. Is there any control which calculates the drawing power based on the recent tax statement or stock statement, whatever it is? Whether the loan classification, control around the loan classification as per the prudential norms, standard, substandard, all that stuff. Is there any control around that? I will check that. So I will check all those things when I will talk about the internal controls. Clear? Any doubt? Any doubt?
Yes, sir. Clear.
If you want to see the answer for this particular question in your study material, please come to the page number 14.32. So 14.32 contains the detailed answer in two sections. One is the internal control. What are the internal controls which are there that we will evaluate in case of the advances? Okay. So advances. And what are the substantive audit procedures that you will perform with respect to the advances? And then the recoverability. So bifurcate into, granting, maintenance, recoverability, mortality of the advances, and you will get your, almost all the points that we discussed. So whenever a question comes on the auditing any part of the bank or bank's processes, understand the process and you will be able to answer that. Clear? Let us take one more question. Very good question it is. Let me share the question. Pretty easy, straightforward question, nothing difficult. Okay. Let me read the question.
MS, TRB and Associates have been appointed as the statutory central auditors of Vikas Bank Limited, a nationalized bank, for the financial year ending 31st March 2024. During the course of the audit, the engagement partner, CAT, observes the following regarding a specific loan account. Borrower, MS Solar Power Infra Limited, a public sector undertaking. Facility, term loan with an outstanding balance of 50 crores rupees. Security, the loan is fully secured by a guarantee from the central government. Status, the principal and interest have remained overdue since September 2023, i.e., overdue for more than 90 days. Bank's treatment. The bank has classified the account as a standard asset as on 31st March 2024, reasoning that the guarantee has not been invoked or repudiated. The bank has recognized interest income of 4.5 crores rupees on this account on an accrual basis and credited it to the profit and loss account. The bank management argues that since the loan is backed by a sovereign guarantee, it cannot be treated as a non-performing asset, NPA, and consequently, income recognition on an accrual basis is justified. Required. As the statutory central auditor, evaluate the appropriateness of the bank's accounting treatment regarding asset classification and income recognition with reference to the prudential norms prescribed by the Reserve Bank of India.
Pretty straightforward question. You have been given some facts in the question itself. Okay, there is a borrower who has borrowed certain amount. Okay, and accordingly, basically, if you see over here, what is the treatment, guarantee? Okay, what bank has done the classification? You are the central statutory auditor. You need to think and you need to answer on the appropriateness of the bank's accounting treatment. Okay, so take a minute, read the question, and then tell me what you should do. Quickly.
Sir, since principal and interest is overdue for more than 90 days, it should be classified as NPA. Once it is classified as NPA, income should be recognized. Income should be recognized based on a receipt basis, not an accrual basis.
Receipt basis,
Hence,
not on accrual basis. Okay.
yeah. Hence, the accounting treatment followed by the bank is not correct.
So you are saying it is correct?
Not correct, sir.
Not correct. Anyone else with a different answer? Anyone? Okay, not an issue. We will understand this in a detail, on a detailed basis. First of all, we need to understand whether this is an NPA or not. Okay, we'll go step by step. NPA, then we will see the classification, okay, standard, substandard based on the NPA. And then on the basis of that, we will be taking account of the income, which is there. Fine. Now, first of all, the account was term loan 50 crores, fully secured by the guarantee by the central government. Principal and interest have been remained overdue since September 23, overdue for more than 90 days. Now tell me whether this is an NPA or not. What is the criteria of being classified as an NPA in case of a bank? When you will classify a particular account as an NPA?
In case of term loans, if principal and interest is overdue for more than 90 days.
Absolutely. If it is, more overdue for more than 90 days, I would be classifying that as an NPA. That is appropriate. Okay. So for bank, the classification of NPA starts with 90 days. Now in this case, should I classify this as an NPA?
Yes, sir.
I will classify this as an NPA. Okay. If I classify this as an NPA, then am I required to recognize income on the NPAs?
Income will be recognized on receipt basis.
Income will be recognized on receipt basis. If you write this answer, your half of the answer will be correct, but you will not get any marks, even though your half is correct. The reason because, first of all, this particular borrower is fully secured by central government guarantee. Although it is overdue, principal and interest remained overdue, I will still not classify this as an NPA. Why? I will still not classify this as an NPA. Because this is backed by central government guarantee. And this can only be treated NPA when the government repudiates its guarantee, when it is invoked. Till the time it is not invoked, I should not classify this as NPA. This will be standard asset. So the standard asset classification is correct. Because the guarantee has not been invoked or repudiated. Clear? The central government guarantee.
Yes, sir.
Okay. Now, if I say this is a standard asset, should I recognize the income on accrual basis? Should I recognize the income on accrual basis? Yes, no.
Yes, sir.
How many of you say yes? Or anyone with a different answer which says no?
No, we have to book it.
Yes, no.
No, sir, not aware of this, sir.
Okay. Now, see, in this particular scenario, the exemption which is given, okay, the exemption of the classification based on the central government guarantee, which is given, is only for the NPA classification. It's not for the income classification. Let's go to the prudential norms which are for their banks. Okay, government guaranteed advances. If it is a government guarantee advances, yes, I can treat NPA only when the government repudiates guarantee or when invoked. Okay, when the government repudiates guarantee when invoked, then only I will treat NPA. So till that time, it will be standard. However, this exemption is only from the classification, not for the purpose of recognition of income. That means still for the recognition of income, even if I say it's a standard asset, I will follow the norms of NPA. That means I will recognize the income on the basis of receipt. Once I receive it, then only I will record the income. So in our scenario, recognizing the income of 4.5 crores on accrual basis is not approved, not justified. Because I have exemption over here. Yes, I have exemption from the classification. But not on exemption on classification is there, not on accounting. Clear? Any doubt?
But this guarantee covers interest income also in case of default.
Yes. All the incomes. Like, so you need to follow the prudential norms now for the income recognition, which is there for the NPA.
Sir, this asset classification, even though if it is NPA for more than 12 months, even if it goes into the doubtful category also, then because of that central government security, won't it be affected, sir?
When it is backed by the central government guarantee, I cannot treat as an NPA. If it will start, like if I will not treat it as an NPA, so substandard, doubtful, all these category will never come.
Okay, sir.
This is for the central government. Now, with effect from the year ending 31st March 26, state government guarantee advances, investment in state government guarantee securities would attract asset classification providing norms if interest or principal or any other amount due to the banks remain overdue for more than 90 days. So, it is not there for the state government. It is only there for the central government. Remember that. So, tomorrow if the question it is state government, your answer should be different. If it is central government, your answer should be different. Clear?
Okay.
Yes.
Okay. Now, let us take one more question again. And if you want to write the answer for this particular question, how to write the answer, I'll just show you. See, in case for the answer, what you need to do is start with the provisions. Okay, prudential norms of income recognition, asset classification, all those things. What is the central government guarantee, repudiates, all those things you need to write. Income recognition not to be taken unless interest is actually realized. Okay, reporting on LFAR, all those things. You analyze the case. It's standard asset because government guarantee, income recognition, cash basis on realization, and then give the conclusion. So asset classification is correct. Income recognition is not correct. Simple. Okay. This is how you can write an answer for this particular question. Now let us take one more question. Again, a good question. Let me read it.
Sir, one question regarding last question. I just want to understand in respect of central government guarantee, is it cover default also, interest also? In case of dispute, they will give only principal.
I did not understand.
In the last question, we are saying like central government guarantee is there. In case of central government guarantee, in case of dispute, government will give only principal. Na? In case of disputed interest, overdue, will they pay?
Interest no. That's why what they are saying is the exemption is on the classification. That means the principal amount. There is no exemption on the recognition of income. That is interest. So guarantee is not there on the interest. That's why you have to record the interest as per the NPA. That only when realized.
Okay.
So interest
So
will work as per the requirement it was there for the NPAs. There is no guarantee of the interest.
So 100% risk is not covered in case of central government guarantee also. Only principal is safe. My interest on principal, like my income is gone.
In central government, interest or principal, both, they are not covered. In state government, not in central. In state government, principal or interest, both are out of that particular, exemption.
Or in case of general, like if we discuss about any general guarantee given by bank to bank, any person, is it generally cover only principal or interest also in case of dispute?
See, again, that depends upon the type of guarantee which is given, type of loan. A lot of complications are there. There is no single answer to that.
But in general, I think only principal is allowed, na?
Generally, yes. Generally, I would say yes. But again, there are a lot different scenarios, because if it is real estate related, agriculture related, a lot of different things are there in bank. So even if I say general also, there is no single general available for you. Yeah, but usually it only covers principals.
Okay, thank you.
Any other questions? Any question? Okay. If no questions, let's move back to that particular one, the one we were discussing.
JKL and Co. are the statutory branch auditors of the City Main Branch of Prosper Bank Limited for the year ended 31st March 2024. While verifying the advances portfolio, the audit team scrutinized the cash credit account of MS Fabricators and Co., which has a sanctioned limit of 100 lakhs rupees. The outstanding balance in the account as of 31st March 2024 is 95 lakhs rupees. The auditor observes the following. The borrower has not submitted the stock statements for the months of January, February, and March 2024. The drawing power, DP, is currently being calculated in the system based on the stock statement of December 2023. A stock audit was conducted by an external firm in December 2023, which reported that a significant portion of the stock was obsolete. Based on the stock audit report, the actual drawing power should have been reduced to 80 lakhs rupees. The branch manager explains that since the outstanding balance, 95 lakhs rupees, is well within the sanctioned limit, 100 lakhs rupees, the account is standard and regular. He further argues that the non-submission of recent stock statements is a temporary deficiency and should be ignored. Required.
So, in this particular case, there is a, cash credits facility, 100 crores, outstanding balance is 95. Drawing power is calculated based on December 23 because Jan, Feb, March 24 statements have not been submitted. Stock audit was conducted in December 23. They told that the stock is of 80 lakhs. Drawing power should be 80 lakhs. Branch manager says that the outstanding balance of 95 within the sanction limit of 100, okay, is standard and regular. He further argues that the non-submission of retained stock statement is temporary deficiency, not is required to be. Now, you need to talk about the classification of this particular cash credit facility with reference to the RBI guidelines and internal control, procedures that we are required to follow. So, what do you think, as per the prudential norms and or the asset classification norms, whether this particular cash credit facility should be classified as a standard or should be classified as a substandard or other classification that you may have? So, what do you think?
Sir, here the account is NPA because the drawing outstanding balance is not, that means outstanding balance exceeding the drawing power, that is 80 lakhs. Moreover, the stock statements were 3 months previous ones, means if it is less than 3 months, then we can consider it as regular, but the stock statements are like 3 months previous ones. Hence, the drawing power also should be reduced to 80 lakhs and it should not be 100 lakhs.
Okay.
Hence, the outstanding balance, yeah, exceeding the drawing power, it is NPA.
It would be NPA.
Yes, sir.
Okay. Anyone else with a different answer?
And moreover, it is not temporary deficiency because stock statements are 3 months older ones.
Absolutely. Okay. So see, again, I will tell you how it works in case of the cash credit accounts and when we are required to calculate the drawing power. Okay. So let us understand by the provision itself what the provision says. Now, account with temporary deficiencies. Okay, we will understand with the account with the temporary deficiencies. And by this way, we will understand what are the account with the temporary deficiencies and what are the accounts where we cannot say it's a temporary deficiency. Now, the classification of asset as an NPA should be based on the record of recovery. Okay. Basically, I should not classify any account as an NPA because there is some deficiency in that account. Okay, which is of temporary nature. Now, when I talk about temporary in nature, that means that it is not beyond 3 months. Understand that. For example, non-availability of the adequate drawing power on a particular given day. But again, it is not beyond exceeding 3 months. Okay, or balance outstanding exceeding the limit which is there. Okay, temporarily. Non-submission of the stock statement on the dates of renewal. Again, because of this, there could be a scenario where I'm exceeding the balance, I'm exceeding the drawing power. No, but in that scenario, I will call it a temporary in the nature. When I will not call these things as a temporary in the nature is when the drawing power, okay, the drawing power, is determined, or there are irregular drawings which are permitted for a continuous period of the 90 days. At that point in time, the account will become NPA. So, if there are irregular drawings, okay, in a particular account for a continuous period of 90 days, I will consider that account as an NPA. If there are regular or ad hoc limits need to be reviewed and which are not regularized not later than 3 months from the due date, I will call that account as an NPA. Okay. In some cases, I am allowed to, allowed a period of 6 months, but again, that is, I have to provide that detail to the, to the head office that this is the evidence because of which we are extending the time limit, and that is to the case-to-case basis, not in all the bases. The extension of, more 3 months is allowed, but it is case-to-case basis. Generally, anything beyond 3 months, I will not call as a temporary in nature. Okay, so the determination of the drawing power should not be older than 3 months. Older than 3 months would be deemed as irregular. Now, what will happen if I call a particular account as an irregular? Or if a cash credit account, if I call a cash credit account as an irregular. So, the definition of non-performing asset. It's a loan or advance. In case of an overdraft or cash credit, if it remains out of order, as indicated in 2.2 below, it will be classified as an NPA. It will be classified as an NPA. Now, what is being out of order? Out of order basically, as we discussed, it's irregular. Okay, it is not in line basically. So the definition for the out of order which is given is that the CC or OD account remain continuously in excess of sanction limit or drawing power for more than 90 days. Okay. Outstanding balance is less than the sanction limit, but there are no credit for continuous 90 days, or the credits are not enough to cover the interest debited during the period of 90 days. In that particular case, I will call as an out of order, and that will become an NPA. In our given scenario, if you see the particular sanction limit which is there of 100 lakhs is based on the December 23. I am standing in March 24. More than 3 months? Okay. Again, in December 23, there was a stock audit which talked about reducing the drawing power to 80 lakhs. And the drawing power is 100. Beyond the limit. For more than 3 months. Hence, I will not call this as a temporary deficiency. It's an irregularity. Or you can say out of order. As a result, this will be classified as an, instead of standard and regular, it will be classified as an NPA. Clear? Any doubt?
Sir, but December 23 and 31st March, can we say it's more than 3 months? It's up to 3 months, no?
More than 3 months. See, in December 23, it's not on the 31st December.
Okay. Thank you.
And again, like when I talk about, okay, in December, so December can be any particular date. If it is December, any particular date, if you will add up, it will cross 3 months. The entire January, February, and March, even 31st December, 31 days of January, 28 days, and then 31 days of March. 90 days, irregular. Because as on closing of 90th day, I have to consider.
Okay, thank you.
Any doubt? No? No doubts? Okay. Let me take up one again good question. Very good question. Let me share this. Very good question. Okay. Let me read it quickly for you guys. Messrs. GST and Company are the statutory central auditors of Secure Bank during ended 31st March 2024. During the audit of the investment portfolio, the engagement partner, G, scrutinized the holding in the state government bonds and corporate debentures. The auditor noted that specific holding in Messrs. Sunrise Power Limited, there is a company. Okay. The bank holds debenture worth of 10 crores. The interest on these debentures has remained in arrears and unpaid for 105 days as of the balance sheet date. The bank has continued to recognize interest income on these debentures on a accrual basis. The bank has carried these investments at their book value without creating any provision for depreciation, arguing that the default is temporary and the company has promised to clear the dues shortly. As a statutory central auditor, evaluate an appropriateness of the bank's accounting treatment regarding income recognition, valuation of these securities as per the prudential powers. We are now talking about debenture. So tell me, what do you think in this particular scenario? Come on, quickly. What do you think in this particular scenario? Anyone? Whether accounting is appropriate or not? Yes, no?
Not appropriate,
No,
sir.
sir.
Since it is in areas, it should be on receipt basis.
Okay. Receipt basis. Very good. Okay. So now understand one thing. This is similar to what we call, like we have seen non-performing assets, the term NPA. Yes. Now this is called a non-performing investment, NPI, similar to non-performing assets. Okay. There is a prescribed way of accounting of those non-performing investments. Okay, how non-performing investments or these are looked into. Again, it's similar to what we have discussed in the assets. It's the same. When we talk about non-performing asset, a non-performing asset is a loan or advance. Okay, we talk about, if we see the definition of non-performing asset, let me share the particular regulation. I talk about, when I say non-performing asset, I talk about loan or advance. I'm not talking about debentures. No, I'm not including debentures in NPA. So where then debentures are covered, basically, in this particular, prudential norms. Basically, debentures, optional current, convertible bonds, all these things are non-performing investments. These are the non-performing investment. They are required to be, accounted the way we do NPA only. There is nothing difference in that. Okay. So in this particular case, let me show you the non-performing investments. Sorry, it is stuck.
Sir, one question. We have to refer this act also. Basically, I've seen like you are referring act again and again. Everything is not covered in study material.
No, it's from the study material. So it's there in the study material also. Let me also take whatever we are discussing, also given in the study material. Let's say, for example, if I go study material, account with temporary deficiencies that we discussed in the last, it is there. It's there in the study material also. So all these things are there in the study material. And from like the study material and what you can say, both I am covering simultaneously. I'm also showing you from the act. I'm also showing you from the study material. Okay. So again, as I was saying, with respect to the investment, I'll show you in the study material itself the investment approach. Okay, how we need to do the audit of investment. So over there, like as I was talking about, classification of investment. So investments are classified under these three categories. Again, they are required to be, like income is required to be booked based on their classification. Like what is the classification, and on the basis of that, I will be booking the income on these particular investment. So based on the classification and everything, I will book the income. And then if it is a non-performing investment, the way it is there in this particular scenario, okay, I'm not required to book any income on the non-performing investment. I need to book when it is realized. In the given scenario, it is more than 90 days. 105 days has been there. The debentures has remained arrears and unpaid interest on these debentures in the given scenario. As a result, recognizing on accrual basis is not appropriate. It should be recognized on the receipt basis. So if I talk about on page number 14.29, if you see, verify that the investments are classified as a non-performing investment NPI as per the applicable RBI guidelines. Non-performing investment are those where the interest or principal in arrears and remain unpaid for more than 90 days. In such cases, banks have not to reckon income on securities and are required to make provision for the depreciation in the value of investments. So this is, again, in the study material, if I show you the same into the regulations, investments, I think there are separate regulations for the investments. It's not in that particular same regulation, it's in the different regulations. But again, if you see, I'll check if I have that another regulation also. But the investments are also required to be classified, like if it is NPA or NPI, as we discussed, okay, they are required to be classified, okay, and then on the basis of that classification, income is required to be recognized. Clear? So in our particular question, I'll go back to the question. 105 days. This is NPI, non-performing investment. Accrual basis, incorrect. It should be receipt basis. And this is not temporary in nature. No, because more than 90 days. This is more than 90 days. As a result, this particular debenture will be classified as a non-performing investment. Straightforward, nothing difficult. Clear? Any doubt? Any doubt till now? Yes, no?
Clear, sir.
Okay. Let us take one more question, okay, on the similar lines. Let me share the screen. Very good question. Let me zoom in. CA Garvit has been appointed as the auditor of Liv Bank, a nationalized bank. During the audit, he observed that the bank has recently expanded its credit card division and is witnessing a significant rise in the number of credit card applications. He also comes to know about an incident where few unissued credit cards went missing from a branch, raising concern about the effectiveness of the bank's internal control. Liv Bank is aware that should be strict control over the storage issuance of the credit card to prevent misuse and fraud. In the given situation, how will CA Garvit evaluate the internal control system in the area of credit card operations of the bank? So, if you are on the place of CA Garvit, how will you evaluate the credit card operations? Now, think from the issuance to maintenance and everything in that way. Think of the life cycle of the credit card, and on the basis of that, you will be able to answer. From the issuance to the delivery to the settlement, or getting the payments, transactions on the credit card, closure of the credit card, periodic review, all those things. How will you do that? Or what internal control you will look at? Let's talk about issuance. When a credit card is issued, what do you think is important to check?
Again, the credit worthiness of the
Absolutely, credit worthiness. So there should be a control around
credit worthiness of the borrower.
Yes. So control around credit worthiness. Then again, there is issue with respect to the storage and delivery of the control of the credit card. So there should be a control around that. One particular answer is given in the question itself. Then if there are credit card issued and if there is a transaction happening, what would you like to have a control of? For each and every transaction, what should be the control? Any transaction can take place anytime on credit card?
No, sir, it should be within the limit sanction.
Yes, within the credit limit. The credit card has a limit. So the transactions which are happening should be within the credit card limit. Okay, so there should be a system that when I am purchasing anything, before the purchase happens, there should be a mechanism to check that whatever amount is going to be deducted from my credit card is my limit has that amount. It should not be the case that my limit is 50,000 and I'm trying to do a transaction of 2 lakh rupees. And this should happen before doing the transaction. So before, I swipe, I enter the PIN, before transaction get processed, amount get delivered to the vendor or merchant, this check should happen. And then the settlement should go on. Then there should be control around the, once some, let's say, check has happened, transaction has happened, then there should be a system and the control around settlement of the merchant, like what amount goes to the merchant. Yes. Then what next apart from settlement to the merchant? What do you think? There should be a transaction control around in case of credit card transaction.
There should be periodic review in case if there is any change in credit limit.
Very good. Yes. Periodic review of the credit limits. What else?
But sir, here question is related to misplace of credit cards. Like I think this is different now. Like we have to see controls like pre-activation is there or not there, because when they send the card, there is some pre-activation activity they are doing. This is related to before received by the consumer. At banking end, is it misplaced? Like what types of controls they have? Is it different or?
See, again, now when I talk about in this particular scenario, okay, about the credit card, we are first understanding the credit card operations. What are the credit card operations? Okay. And there is one example given in this particular question. What question says that this happened, this particular scenario happened. But what is asked in the end? You need to evaluate internal control in the area of credit card operations. They are not saying that only with respect to handling of credit card. They are saying area of credit card operations. So this is one example given of a particular credit card related matter. This over here. And in that basis, you are asked something like this. Internal controls on the
bank having controls. My point is, if any card is misplaced before issuing to the customer, they having own control, like nobody can misuse, because activation they do when they authorize the customer, because name is there, specific authorization is there.
Yes, so as we say, like one option, one particular answer is given in the question itself, that there should be control around storage, issuance of the credit card.
Okay.
As you are saying that the credit card should be activated, so there should be a control around that. That till the time credit card is not activated through OTP, no transaction should be allowed.
Correct.
What else? What other things you think about credit card operations? I'm talking operations. It covers everything. Now transaction happens. What next? Credit review. Anything else do you think that is relevant from the credit card point of view?
If balance is overdue for more than the specified period, bank should take appropriate action.
Yes. So there should be a way that if there are payment overdue beyond a reasonable period, first of all, there should be, stoppage on the credit card to avoid increased losses. That means I should not allow that person to use the credit card. There should be temporary seize on the credit card. Defaulting customer should be stopped. Their credit should be stopped immediately. Otherwise, let's say, for example, last month 1 lakh rupees I have not paid. This month is also I'm allowed to do transaction. I'm doing transaction. I will not pay. Then there should be a system or control to send the statement regularly to the customer. Like, letting customer know what your balance is, how you need to pay. This is the transaction statement and everything. Otherwise, how they will pay this balance. So control around sending the statement. And if there is a outstanding amount, payment overdue, so appropriate control for the monitoring of that overdue, recovery of that overdue, all those things should be there. So from start to end, these are the controls that you should check with respect to the credit card operation.
Sir, one question is out of context, but still I want to understand, like credit limit is not controlled by specific one bank. Like I can have the credit card for 10 banks, but I think there is no control on that way. Like I can circulate money from here to there. Is it right way? Credit card, some controlling should be there. Like one person having how many credit cards is having before. If I'm an SDFC credit card, ICC bank when issue the card, he know me, like he's having the data, like I'm having 2 cards already, I'm in default.
Yes, definitely they have your CIBIL score. Your CIBIL says everything. When you applied for a credit card, they check how many credit cards you have, how many loans you have. They even say that what is your frequency of the default on those. Like, is there any one miss? There is continuous timely payments over last 5 years. They have all the records.
But overall limit, ICC bank come to know, like having already 3 cards, I profile like limits, they will come to know.
You can also download your CIBIL report. You will also get all the limits, everything. Then credit card, loans, everything issued in your name, maximum limits, everything is there. So the bank already has the maximum limit on your credit cards, the type of credit cards, the details they already have.
Right, so one bank can see another bank full data before issuing.
Yeah.
Okay.
Through CIBIL, yes.
Okay.
That's why there comes credit worthiness. Before issuing the credit card, I should evaluate the credit worthiness based on the data, the CIBIL data. Should I issue the credit card? Is there any default in the name of this particular person in any other bank also? Is the person making timely payments? Is there any settlement in the past happened within the name of person? That's why your CIBIL score decreases. So till the time you don't have a good CIBIL score, they will not issue.
Okay, thank you. Got it.
So everyone come on the page number 14.19. Over there, you have answer for this particular question. That's the credit card operations. The things we discussed: application, credit assessment, storage and issuance, control over that. Okay, unutilized limit, settlement should not exceed a specified percentage. Then prompt reporting by the merchants for the settlements, reimbursement to the merchants only after verification, commission settlement, then statements regularly sent to the customers, monitoring and follow up with the customer payment, overdue beyond a reasonable period, credit should be stopped, periodic review of credit card holders account, okay, determination of doubtful amounts for the provisioning, all these things that we discussed. These are the credit card operations and the controls around the credit card operations that CA Garvit should evaluate. Clear?
Sir, in the point prompt reporting by the merchants, it means the merchant has to report it to the bank, sir?
See, what happens is when you do a transaction, okay, merchant have a window to raise a dispute over a transaction. If they have been charged extras, if they have received less payment, something like that. So over there, merchants can, because see, once you do a transaction, the company, the bank actually recovers the commission on the credit card. There are charges for these, settlement through credit card, and those charges are borne by the merchants. So sometimes merchants may see excess charges, or they may see that, the payment has not been gone appropriately, something like that. So they should do a system of prompt reporting. Like there should be a system of prompt reporting by the merchant. Merchant should have that window available where they can report if there is any dispute with respect to credit card settlement.
Sir, when it is from the merchant side, how we can verify it from the bank's perspective, sir?
But there should be a system given by the bank to raise the dispute. And there should be a check around that. Is there any system to raise the dispute? There should be a system of the prompt reporting by the bank given to the merchants. If there is no system, then you need to check how the bank tracks all the disputes which are raised by the merchants.
Okay, sir.
Any doubt? That's why I say, like here in bank audit, understand the process which is there, like credit card operations, SLR, CLLR, cash, advances, investments, fixed asset. Understand those operations of the bank. And trust me, you will be able to answer on the area specific question that how to audit the area. If you understand how these transactions work, how the system works in each and every area, it will be pretty easy for you to answer the question with respect to how to audit that area. Today, if I tell you how to audit sales, you might be aware about it because you know how sales works. Same is with the bank audit. Clear? That was your unit 1 and unit 2 that we discussed, and the questions we discussed on that. Again, I would say this is not a substitute of reading entire chapter and practicing question on the chapter. You have to go through the lectures which are there, earlier full lectures. You have to read the study material. You have to practice. Okay. These are the revision lectures. Please, please, please practice the questions which are there. Okay. Why? Reason because discussing questions over here is one thing. Writing the answer of the question by your own self requires some level of practice because you need to maintain the quality, you need to maintain the appropriate language, appropriate length. Okay, and within the given time frame, you have to write the answer within the given time frame. So please make sure you have the writing practice. Okay. If there are no doubts, then I would like to keep the session till here. I will meet you in the next session, and next session is I think on 18th Feb, Wednesday, internal audit and the group audit. Okay. So if no doubts, then thank you guys. Thank you for participating in the today's session. I'll see you in the next.
Thank you, sir.
Thank you, sir.
Thank you.
Thank you. Thank you very much.
Thank you. Yes, session over. Thank you. Good night.